Dear students, very good morning to all. I am Vinay Kumar C, Assistant Professor, Department of Commerce, Sri Venkataramana Swami College. Subject Personal Investment Management to the second year BCom students of SVS College. Hope you are all familiar with a stock market. Earlier in the classes, we are all discussed the topic related to the avenues of investment, and also we have started the new chapter, stock market. Under the stock market, what are the documents which is required towards to open the demat account? So related to that aspects we are discussed, and also we are discussed that how to invest in shares. What are the necessary precautions should be taken towards the investments in stock market, and that means have a clear defined long-term investment goals and choose the financial asset based on our goal and timeline, but realistic, and do a complete research on the company we plan to invest, like that we are discussed earlier. So let us discuss the stock indices. What do you mean by the stock indices? So a stock index, or also called as a stock market index, is an index that measure a stock market. So it is just like a measurement. So how to measure the stock market? That helps the investor to compare current price levels with the past price to calculate the market performance. See, the stock price is today is 70.3. So it was last week it is 69.8, like that. So we are go for comparison of the shares of the price of the shares. So like that we are going to take the decision towards the investment, whether shall I invest the money in shares or not, on which company can I invest my money, like that the decision will be taken. So index which is relates to the comparison between the present and past price of the shares or debenture bonds, etc. It is computed from the price of selected stocks, typically weighted arithmetic mean, which is used towards the calculation of the price of the stock. It is a statistical measure which shows the changes and taking place in the stock market to create an index. A few similar kinds of stocks are chosen from the amongst the securities already listed on the exchange and grouped together. So here in the Bombay Stock Exchange or the Nifty, like that, there are some stock markets. There the few companies securities are registered. So the investor can choose the shares of those companies only. That is the main importance of this stock indices. The criteria of stock selection could be the type of industry, market capitalization, the size of the company, like that. So here we are going to take the decision towards the which industry shall I want to invest. So that means type of the industry. So the industry may be related to the medical instruments, or the industry which is related to the other product like agricultural so industrial products, like that. So and also the FMCG products, like, or even though it may be the electronical products, or even though that is related to the engineering related products, to manufacturing related products, like that. So which industry, so the decision should be taken. Even though the size of the company is also necessary. So is it the company is a small company or big company or a medium company? So like that, according to their capitalization, so we are going to take the decision about the which shares shall I want to purchase. The value of the stock market index is computed using the values of the underlying stocks, and any changes taking place in the underlying stock prices impact the overall value of the index. If the price of the most of the underlying securities rise, then the index will be rise, and vice versa. In this way, stock index reflects overall market sentiment and direction of price movements of products in the financial, commodities or any other markets. There are several reasons the price will be up and down, due to the political reason, due to the economical reason, or even though the government, new government or existing government performance, like that, and also the individual performance of the industries and companies performance, that also uh, may be favorably or unfavorably influence towards the up and down of the price of the shares. Okay, some of the notable indices in India are as follows. So benchmark indices like NSE, Nifty and BSE Sensex. So in India we are trading with the help of these Nifty or Sensex. That means BSE is a Bombay Stock Exchange, National Stock Exchange is NSE. So these are the benchmark indices for stock market in India. The broad-based indices like Nifty 50 and BSE 100. So here under a National Stock Exchange, there may be 50 companies are registered, whereas in Bombay Stock Exchange, 100 companies are topmost 100 companies are registered. Indices based on market capitalization like BSE small cap and BSE mid cap. So earlier I told that the company may be a small or big. Okay, according to their capitalization, depend upon their capitalization, we call it as a small cap, and also we call it as a mid cap. So even though you are trading in BSE, it is a BSE small cap or BSE mid cap. Like that, now the industries are classified. Sectoral indices like Nifty, FMCG index and CNX IT. So depend upon the type of the industry. The industry may be the IT industry, the industry may be FMCG, that means fast moving consumer goods industry. So depend upon that, the separate index will be there. Companies raise the capital by IPO normally. So what we are do for the purpose of investment, we go for initial public offering. We offer the public to invest the money in our shares, so that is IPO. And after IPO we get, so these companies get listed on the stock exchange such as BSE or NSE. So this is the next step. After the collecting the initial public offering, we go for registration. So where we are going to register? We are going to register in the Bombay Stock Exchange or National Stock Exchange. This provides a greater opportunity for the public to buy the shares for the attainment of their short and long term goals. It is not only beneficial for the customer, even though it is beneficial for the companies also. At the time of collection of the investment, they go for BSE or NSE, even though the investors, they go for BSE and NSE for the purpose of better investments. So next topic, Sensex. Sensex is a stock market index which represent Bombay Stock Exchange. So normally this was Sensex, which completely that relates to the Bombay Stock Exchange. It is a combination of two terms. One it is sensitivity and another one is index. The total company listed on the exchange are close to around 6,000. So here, there is a possibilities of majority, more than 6,000 companies are listed. BSE is a popular equity index, and the S&P BSE Sensex is India's most widely tracked stock market benchmark index. It is traded internationally on the Eurex as well as leading exchange of the BRICS nations. These type of transaction, whatever the business transaction to that is in the form of investment of money in the form of shares, you can also trade in international level. So the other Sensex like European Sensex is also a part of that, and also the major BRICS nations countries also participating in this type of trading. The BRICS nations like Brazil, Russia, India, China and South Africa. So there may be several companies are working in around the countries. So you can also select the company which may be from South Africa, it may be from China, or from India, Russia, Brazil, like that. So international transaction is may be possible in Sensex. BSE Sensex consists of 30 top scripts from different sector which form this index. Earlier I told that they are showing the major topmost companies, that is top scripts of different sectors will be shown on the BSE Sensex. This BSE Sensex is calculated on free float market capitalization methodology, and the performance of these stocks impact the performance of the Sensex. Okay, next, Nifty. Nifty is a stock market index of National Stock Exchange. It is a combination of two terms. One is national, another one is 50. The total company listed on the exchange are close to around 1600. So compared to the BSE, here the 1600 companies are listed. So Nifty consists of 50 top scripts from the different sectors which forms this index. See the difference between Sensex and Nifty. Sensex which is relates to the Bombay Stock Exchange, Nifty which is relates to the National Stock Exchange. So benchmark BSE, NSE, there are 30 companies are listed in the Sensex, whereas in Nifty 50 companies are listed. It is owned by, it is established during the year 78 and 79. So that is the base year for Sensex, whereas for Nifty 1995 as a base year for that. It is owned by, Sensex is owned by BSE, whereas Nifty is owned by NSE, Indices Limited. Formerly it is India Index Service and Products Limited. So Nifty and Sensex are the barometers of the Indian economy. The market's good health simply means the investment culture in a country is in good condition, in more or less indicate the sentiments of the investor in the market. So it is a better option for investing the money for long term. So you can also choose a Sensex or Nifty. So both are very good investment option for the investor. Thank you for watching. In next class we are going to discuss the risk involved in stock market investments.